a sense of capital. Aloha, welcome. Aloha, welcome. Aloha, ladies and gents. Welcome back to a new episode of A Sense of Capital Live Earnings. Your host of the day, as always, is Julian. I'm very glad to have you in, guys. Sorry for the delay of roughly 8 minutes. I just jumped out, honestly, straight out the shower. Had a long night. Currently on vacation, let's say it like this, and so my day and night rhythm is a little bit mixed and unregular. It is how it is, but I enjoy it actually a bit. However, guys, today we will cover the power infrastructure and equipment vendor out of the Netherlands, out of Almere, which is called Alfen. But before we jump in, and I quickly introduce you to the company, and I will keep it very short and compact because in 7 minutes, very likely, the quarterly Q3 2024 earnings will get publicated. A quick disclaimer, as always, in the upcoming minutes, this will not financially be advice, consultation, or whatsoever, and there's no guarantee of for the correctness of the provided data. Okay, guys, just a quick sip of water. And let me quickly share my screen to introduce a little bit to the equipment, what Alfen is basically developing, manufacturing, and of course selling and servicing through the whole life cycle. So you can see we talk about 3 major pillars, core pillars of Alfen, and where the full focus is set on. And we're talking about smart grid solutions, so basically trafo stations, substations, smaller, larger ones which are solutions where you even as a human being can enter through a door the station, and other ones which are a little bit more compact, as you can see the version here in the background. Then we're talking about, and that's the legacy business, the oldest ones with the most and deepest history. Then we're talking about EV charging solutions, different kind of chargers, DC, AC, fast chargers, slower chargers, not ultra fast chargers, so not the ones you might see at highways in Europe, which can really fast charge up the car, but more like the ones you put in your garage as a private person, or even more regular, you install at your parking lot, a parking space as a company, for instance, so your staff members, your employees can charge up their cars, basically their EVs. And last but not least, we're talking about ESS, energy storage solutions. So like these ones, which are stationary ones, basically, or for instance, getting connected to a solar farm or to a wind farm, to wind turbine generators, or there are even flexible and mobile ones, which you can use, for instance, for music festivals, or construction sites, for this kind of purposes, basically. So it's quite simple, let's say it like this. It's a company which has, which we talk about a yearly revenue, what is targeted for this year of roughly 430 million US dollars. We're talking about an EV enterprise value of roughly 370 million US dollars, and the company, honestly, which getting crushed very strongly during this business year as well. I'm in the red of roughly 60%, 60, so that's the truth, and that's the hard reality. And even today it tanked by roughly 6.2%, but you need to consider, you know it, Trump was elected in the US, and this has at least initially a negative impact on renewable energy stocks like Enphase, like First Solar, like Solar Edge. You can check it out by yourself. All of them are tanking more or less in the 2-digit level, like 10 till 20% red. And so I assume that Alfen, this is not relating out of the earnings numbers of some predictions or some market participants. I expect this will be more affected by this election in the US, of course, even though Alfen is just active in the Europe, and even there it has a certain focus. Substations getting sold only in 4 countries, Alfen, EV chargers, I think in more than 20, and ESS and energy storage systems getting rolled more and more progressively and aggressively, but it takes time, and the competition here is very strong, especially when we talk about vendors out of Asia, for instance China. Okay guys, in 3 minutes I assume the results will be live. So I'd quickly share just the valuation sheet I prepared for today, so you can see. I mean, Alfen for me is a very simple story. There was a mess going on in the past. You can see here the news. Basically, Alfen decides end of June this year. Alfen decides to adjust 2024 guidance and reassesses midterm objectives, which was the cause for this. I think it was roughly 40% drop in one day, 45%, something like this, so very strong dip. And now they try to make sure to step up their game. That's actually the new headquarters in Halmere, and as well manufacturing as well as office departments. And now they try to improve the situation, come back to the original road, to the original path. I mean, they expanded very strongly. Demand was growing after supply chain issues appeared in the pandemic season 2 years ago and period. And afterwards the demand was very strong, so they hired a lot of people. They expanded in terms of their manufacturing capabilities, as you can see it here. And then demand was broken up, basically. Interest rate was increasing. Customers didn't order that much. I mean, the whole sector is confronted with the situation. That's not the only one, but that is the reason for this strong dip, as you can see here. However, so in the moment we have a check. Let's check already now if the results are live. You can see here for investor relation site of Alfen website, and as soon as they are live we will see it here in this area that the webcast presentation document is available, and then we will step into it. I mean, now it's 7 p.m. and it was announced that let's see the financial calendar, that 7 p.m. Central European time, of course depending where you're located today. Hopefully I'm not missing the day. The information will be available, so it's just a matter of seconds or minutes, I guess. Let me quickly share this valuation sheet for today. So one more time, for me is really the focus for this company to coming back on the road and to achieve more and higher level of trust for the investors like me, because really I am sometimes have strong serious doubts when I think about the management of Himsen Hers. Himsen Hers was 2 days ago, of Alfen, of course. Actually, really the opposite situation compared to Himsen Hers. There I have a strong trust in the co-founder and still CEO of the company, and the management board. Here I'm not so sure about it, but it is how it is. Not everything is perfect, and I mean, that's the reason why when I share, for instance, the prepared PowerPoint slide deck, and of course feel free to subscribe to the channel if you didn't do it yet. But the cause of this, or the effect on this, is that you can see here the first column, the first row. Alfen is, from my perspective at least, very fair priced comparing it to other stocks, at least I'm a shareholder of, or Nvidia, PayPal, which are popular ones. Maybe you can relate to them if you're not invested or too familiar with the other 5 stocks I'm invested in. You can see, I mean, sales growth 13% is not 100% up to date. I assume it will be more on a level like I mean, they already mentioned 1 digit compared to 2023 will be the outcome for 2024 at least, but this is a blend, an expected blend out of 2024, 2025. So the management and the market, and I personally as well, otherwise I would not be invested, I expect regrowing sales growth in 2025 latest Q1, Q2, but actually already now. So let's see if that will be the case. Going back to the website, checking out if it's available right now. That's not the case, so we can go on. And wait, let me check as well the news, because oh, there are already some news. There already some news go out. Let's check it. Okay, so the actual document is not available yet, but we can already check out the information. And before we dig a little bit deeper, I mean, from my target at least, I mean, they just pushed out a rough guidance of the mid number was 500.25 million euros. Everything here is stated in euros. And so my expectation for this quarter, and I already have seen a number, so it's lower than my expectations, but this would be the expectations. So in terms of revenue, so 47 for EV chargers, 45 for substations, and just 26 for energy storage systems, which makes in total 170 million euros. But on the first glance, we can already see that's not the case. That's a little bit unfortunate. If we're talking about 106.2 million US dollars declined year on year, comparing the quarter by 22%. And we can see here ESS, it's really the, let's say, ignored negative steps son, yeah, if you want to state it like this, word it like this, which is tanking very heavily in the past quarters. And they always mentioned, okay, the decision making of new deals and the realization of ESS projects, energy storage systems projects, getting delayed by a quarter, by a half year, whatsoever. But now it's a time to really perform, and it's very unfortunate what I can tell you already now, that somehow it's not working well. I mean, the competition here is very heavy and the demand is very low in the European market. I mean, the potential is there, but as long as interest rates are high and in general a lot of energy storage, wind energy or solar farm projects getting postponed, this of course has an effect as well on the demand for ESS for Alfen. Instead, gross margin looks on the first glance already very good. What I can tell you, just EBITDA looks from my perspective fine. That's good as well. Okay, I mean, that's just the kickoff, I would say. I assume that the numbers are now, yes, now you can see it here, it's available. So give me a moment to take a sip of water. And we jump into the actual details, the results. And while doing this, I will already start to enter the numbers into the sheet to later save some time and quickly come to the point to add value for me and yourself, to have a little bit more transparency, how at least I judge about those results. So starting with 106.2 million euros revenue. So I assume honestly that ESS is looking very, very bad. I mean, already when they mention it here, and it was already the outlook, the expectations, the bar was not raised that high, so I expect that it's really, really low. And okay, if it's the case, it's the case, but we will figure it out. Okay, 106.2 as already stated. Let's go back to the tool, and we can it's calculating by itself, but we can already enter the gross margin of 32% at least. 32%, we got it here, which is actually a higher one. And margin recognition. Yeah, okay, one-off timing effect in margin recognition in energy storage system. Yeah, okay, that is not that convincing. However, let's use this number and copy it into the sheet. So left is revenue part of the sheet, and that is that's the profit part. Okay, let's go back and check out together further numbers. Adjusted EBITDA, we have it already here, 7.2 million, which, okay, compared to 1 year ago, of course, is not compelling at all. But I mean, the company is targeting an adjusted EBITDA for the full year 2024 of 5%. So 6.8% is definitely above the target, even though this target is very, very low and nothing exciting. But we need to be happy with everything we get in this regard. I wanted to see here 5 million. Why? Because of this exact target of adjusted EBITDA of 5%. So if we now have 6.8%, 8 million, this is how it looks basically. Let me check if that's correct. And 4%, oops. That looks good. Is it correct? Yeah. Adjusted EBITDA margin of 7.2. Okay, there we go. And 6.8%. Okay, all right. So we got those numbers. Let's go further and dig into the documentation. There we go. So I mean, revenue definitely not compelling, and if I would check the stock price right now, I assume it's definitely lower than in advance of the earnings results. But let's see. I mean, we really need to read the text, even if it's not much, which the documentation contains. But it's all about this comeback situation, how the management is now basically directing, steering through this critical situation, how they fire staff members, for instance, release them to lower the cost level with bank of a new financing. That's a good one. That is what I can tell you on the first glance. That's a big one, because I mean, the situation, it's really a turnaround around bad. One perspective or one aspect, because of the overall market and the demand which needs to come back in the renewable sector, but especially as well a turnaround story in terms of Alfen itself. Again, what I told you, that they really started this program to make sure, okay, what kind of products we want to set the focus on which kind of regions we want to be active in. And I'm not sure if you hear it, but my dog is screaming very, very loud, very active. So, this is how it is. I hope he has not a nightmare, but more like a daydream. Okay, let's go on. But that's a good. So there was really some serious financial issues going on, and they went because of this drop in terms of demand. They ran out of cash and they needed some access to new liquidity, and it's great to see that they reached this kind of an agreement. That's a big step. So this might be a game changer already, and the market was looking for. So very strong news actually. I'm very interested how the market will react to this, but nice to see. And that's already the next one. It's already not a positive one. Alfen projects 2024 full year revenue to reach the low end of its updated outlook. So I mean, I mentioned a moment ago 502.5 million, which is exact mid of this range. And now the lower one, and I assume when I go on, it will be the expected to impact softness actually in EV charging. I would expected that it's ESS, or the storage systems, but actually EV charging, man. Margin outlook, okay, that at least looks good. But now let's step into the details, and we start with their very solid, at least in the past, solid legacy smart grid solutions business. We're talking about 50.3 million euros in this quarter, and that actually looks for me quite well. So let's go back, and that is, you can see it here, that's higher than expected. And what you can see as well, if you take a focus now into these boxes I marked right now, the full year expected guidance of 502.5 million. I calculated based on the information they provided 2-3 months ago at the news, and so the expectation for me is roughly 200 million euros in terms of substation revenue. And now with the past 3 quarters, in terms of substations, they already covered 73%. So of this guidance, they mentioned right now, okay, they will reach to a lower end, but more because of EV chargers. And what they mentioned as well in the past is they ramp up more and more their production capabilities in terms of substations and trafo stations in their new headquarter, because this new headquarter, this new manufacturing facility, which is by far the largest one, has the primary focus on substations production. And so I assume that this missing 27% right now here to cover full year expectations of this roughly 200 million euros overall in total is very, very likely what they will reach, yeah, and successfully. But let's go back and check out what they added to it. Not that much information in the first glance. Okay, 1% year-on-year development. I assume that really substation outcome in Q4 might be a very surprising and very good one. That is at least now they mention it actually. From 32 substations per week in the first week of July towards 81 per week in the last week of September. I mean, they had this development moisture issues, so one of their substation type or product had issues with moisture. And so they invest, I think, 10-12 million or something like this to adjust the development of the production, and of course making sure that those who already produced and shipped and installed need to get fixed as well. And of course they in general need to ramp up their process, and they had some bottlenecks with suppliers of their concrete buildings for the substations. So this looks very well. And they originally mentioned that at the end of the year they reached a level of, I think, 100 substations per week. So there's still 20 more per week left, roughly. And I think, I mean, you can calculate it by yourself. 20% more like this is 60 million. And if they get, let's go back to the Excel sheet, 60 million more revenue in the Q4, if they can make it happen, then we're talking about, or let's do it like this, very, very easy. 204 million. So actually they cross it by this target of 197 million by 7 million, or 3.5% in terms of their expected target for the full year. So again, substation looks well, and that's the reason why I already give it right now. Oh, that's the wrong one. I give it green color. I mean, it's not super surprising or whatsoever, but it looks really good in terms of a company which is really strongly struggling in some areas, and that's not strongly surprising or something like this, but again, very solid. What they are mentioned as well in the private domain, Alfen observes limited growth in the Dutch market at this stage, driven by restricted grid connection capacity for fast charging and no growth in solar energy. Alfen expects the situation to persist in 2025. That's not that nice. I mean, because that's really not that nice. I mean, I repeat myself, and when I repeat myself, then I think really that is nothing what you like to read as an investor. But really, substation was this safe harbor when we talk about these 3 core pillars: EV chargers, substations, and ESS. And that now they already preparing the investors and warning them, look guys, you see it here, restricted grid connection capacity for fast charging and no growth solar and energy. that it might have a negative impact in the private domain. Let's see. Yeah. But that is really not too nice to see, because at least Substation, I want to see that this business is going on and is a solid source of income and creates basically stability for this company. And it's something they rely on. Okay, let's see. Last bullet point. Overall, Alfen upwards adjusts its revenue outlook for SGS from approximately 5% growth to approximately 10% growth in 2024. And that at least is something good. And then, I mean, I calculated already a moment ago by myself. And yeah, but however, they not even... Look, guys, what is already awkward for me, maybe there is an additional slide here at this document, but regularly they always mentioned, or always the last two quarters, Q1, Q2 this year, they stated the gross margin of each product type, and now it's not existing anymore here. I don't hope that is... I hope they show, they focus it later here in this document. If not, I take it definitely negative. However, let's go on with the okay. What is this, guys? What is this? That's actually something what I like, because again, I want to see that the management achieves higher trust level at the investors, and for me it's important to achieve or create more transparency in terms of information and details and what is going on currently, especially in this difficult, tough situation and period of time. I mean, they have a new CFO, which will be a constant one from 2025 on. Originally, it was just one with a limited contract, timely limited contract, and great to see. Maybe this is an impact of him. Strong ramp up in Q3 supports growth in crit operate segment, while private segment remains flattish. Okay. I mean, every information we get, I'm happy about. Okay, this is... okay. Okay, they used the chart for this information, or here they used... 1 page ago they used the sentence, yeah, okay, whatever, nothing too new. Okay, they are Dutch, so the Netherlands, their home market it's growing, the demand is growing, that is nice to see. Illustrative domains, annual capacity additions, Dutch solar and business market. Okay, yeah, it's going down even, yeah, and you can see, I mean, as I mentioned in the introduction, they are with the Substation active just in 4 countries. I think Netherlands, Belgium, Finland, and another Scandinavian market, not sure which. I guess the primary source of demand is for sure the Dutch market, the legacy business there. And I mean, yeah, where they have been founded roughly 80 years ago, I think. So early in the 20th century, they already had this focused on substations and solutions for the electrical grid. And yeah, okay, still no cross margin displayed, just some additional information to give the audience insights, but I think nothing too special. If you are reflected and a little bit at least superficially experienced investor, you can check out by yourself and find this kind of information, but at least they're providing something. Okay, let's go on with the EV chargers equipment, and here it decreased year on year by roughly 6%, so we're talking about 32.9 million. Let's go back to the Excel sheet. 32.9 million. You see, I expected way more. So it's not just tanking because of ESS, or maybe even ESS is higher than I expected. Okay, it's not, because we already have here 109 million. However, so 32.9 million is definitely not that strong. And you can see it as well here when we talk about the same analogy, full year expected covered. So when we talk about this guidance of 503 million, 175 million was from my side the target based on the information I had by the management, and they just after 3 quarters covered 65% or not 75% or something like this. So that is not compelling. Again, of course, year on year decreases as well. Nothing what you like to see. So I can without reading the details right now, I can already tell you that I rate this red negative. But let's talk a little bit about the details and see what they provided. And maybe there is a reason. Okay, this decline is due to ongoing softness, EV sales, increased competition in the home segment. Both what you don't like to see, especially competition in the home segment. I mean, it's not that surprising. EV chargers, there are many players out there, and to really create USPs when you are a player in this market, in the sector, I think it's definitely a challenge. And I assume that customers, yes, quality matters always a bit at least. And for instance, if you are a Dutch player or German one, for instance, and you see, okay, that's a vendor out of the Netherlands, maybe you prefer this one comparing to one from whatever, Southeast Asia, for instance. But if the price and if you are a price sensitive customer, or even if you're not a price sensitive customer and the price difference is very strong, I think quality is not anymore in the first place relevant. And so competition is, I think, very serious. The same with energy storage systems, actually. Okay, let's go on. In Q3, we continue to see a temporary slowdown to this long-term growth trend. 10% fewer battery EVs were registered compared to first. Okay. This whole chain of which is connected to each other, EVs, and then EVs to EV chargers and batteries and whatsoever. But in the end, that's not compelling. And I mean, it's great that Alfen received some kind of a financial support and injection to keep them alive and stabilize business, and maybe they can go on with covering all of their free business products, so they don't need to cut down that strongly their product portfolio. But I can imagine that they need to release more staff members in the near future than they planned. I think currently it's something like 15%. And I think overall they have something like 800, 900 employees which are active for Alfen. But I can imagine that really on a mid-term range, maybe they really are not active in free product categories anymore. And maybe they release even more staff members as long as this kind of situation is ongoing. Because yes, they can change their internal setup, but they can't unfortunately affect the external circumstances they are confronted with, which getting provided by macroeconomic developments and market developments. Like you can see here, EVs doesn't get registered, not purchased that much new ones, and the same here when we talk about this private sector and solar projects in the substation area. Okay, but however, let's go on. This is business line with less visibility. Flow business current backlog does not support Alfen's full year guidance for EV charging. Okay, that looks really bad. Given EV market, Alfen does not expect an order uptake in Q4 this year or Q1 next year. That is for sure really bad. I mean, you need to know that EV chargers have been their star in especially 2022 and rising star before, but that they don't even make hope for Q1 included doesn't sound well. On the other side, I'm happy that they are that clear, because in the past, from my perspective, they have been too positive sometimes about this kind of information, and or they communicated too positive stuff, too fluffy, or not enough in my perspective. And I like that they are a little bit more conservative in this regard now, but that is not compelling at all. I mean, Alfen doesn't look for me like a winning company right now. I need to mention it, and that's not the first time I state this during an earnings stream actually. Okay, but let's go on. Alfen downward adjusts its revenue outlook for EVC from 5 to 10% growth to up to 5% decline. Oh shit, that is really bad. I mean, doesn't sound that much, but for me personally, I mean, they had always issues, always in a positive way, we as well in a negative way, to set accurate guidance and outlooks. Yeah, sometimes they missed it very heavily, and sometimes they crossed it very and overperformed. And I can imagine that for a mid-sized company like Alfen, it can be sometimes very difficult to set up expectations accurately, especially in times and periods where market circumstances are changing, interest rates are peaking and then dropping, and this kind of stuff. I can imagine it, and a lot of, as you know, EV manufacturers like Volkswagen are struggling at the moment, especially the established ones from Europe and the US. And so it's not just them, for sure not. Look at the price development of, for instance, Enphase, yeah, the microinverter vendor out of the US. It's definitely not the only one who's confronted with the struggle, but it's very unfortunate that they have 3 major product categories and all of them are struggling. Crazy. Okay, let's go for the next one. EV sales are expected to accelerate again in 2025 once affordable models start to launch in 2025, benefiting from lower battery prices and CO2 emissions performance standards for cars that will become 15% stricter. Yeah, okay, all of this is great, but they mentioned this and stating this since quarters, based on my experience, based on my memory. And yes, they're getting cheaper, but let's see. I mean, I think just cheap cars is not enough. Very likely they need funding programs, national funding programs. So potential private persons or private owners can afford it better, easier to afford for them, purchase them. Because now comparing fuel-driven cars to battery and power-driven cars or electrical cars, I think, I mean, at least in my area here in Germany, or even when I'm in the Netherlands, like I think one and a half weeks ago, I was for a week in the Netherlands for business, for instance, or in Austria, I was there 3 weeks ago. The number of EVs you see on the roads is not that strong and present, at least based on my impression. Yeah. However, okay, so substation, as I mentioned, looks good, but I can't see any cross margin, which I don't like at all. Maybe there's a separate sheet, because here again at EV chargers they didn't mention it, but EV chargers for me is definitely bad, not convincing at all. But let's see here, more information's getting provided. Yeah, I mean, for me as well, I believe as well in electrification of the car sector. But the question is when this takes place and how Alfen can participate. And we should not forget, yes, there are demand problems. Yeah, you can see a softness of EV sales, but we should not forget the second part here of the statement, increased competition in the home segment. Yeah, I mean, yes, home segment they have a lot of solutions. Look, when we check it out together, a lot of their solutions, I mean, these are very likely the ones for the homeowners, especially this one, so very simple ones and cheap ones, and which are not that solid, for instance, in terms of weather conditions or external impacts, violence or something like this. But we have here a lot of solutions for the public sector, and in general, I can really, I mean, I'm not sure about this, but I'm not involved into the internal data that heavily, let's say like this. I'm not a staff member, but I can imagine that Alfen really thinks about on the midterm to go out on the home sector and set a higher focus on the business sector and on the public sector to install those solutions, for instance, in the public road infrastructure, for instance. Yeah, I can imagine this has more potential for them. Yeah, but let's see. However, let's go back. Yeah, cars. But the long-term trend is inevitable. Acceleration expected from 2025 onwards. Yeah, we need strong pref, I think, to be invested in Alfen. And I'm not sure, honestly, guys, if I have it. I already, the past 2 quarters, I think I always mentioned, oh, not sure if I will stay invested. And this kinds of results not change this status, unfortunately. Forecast. Yeah, okay. Let's see. Let's go on with energy storage systems. Which was a very, very, very exciting product section in the past, and one of the reasons why I was really honestly convinced to invest in this company roughly 1.5 years ago, and which was really the rising star and now changed heavily, and you can see it here, 23.1 million euros revenue in Q3 2024. So let's enter this. Again, I expected 26, so they can cover full year of already expectations of 75%, so they are more or less on time. But 23.1, you can see it here, not changing that much, because actually last quarter was quite a good one. But again, it was just a peak, more an exceptional one, and I would love to see that it keeps that momentum from Q2, but you can see now it's tanking again back to Q1. Not convincing, and you can see a year-on-year growth 55%. Yes, it was a very strong year last year. You can see a 200% roughly year-on-year growth. The quarter 1 year ago, of course, minus 55%. But however, I can already state it red. For me, it's for sure red. And yeah, let's check the details. Let's check the details one more time. What is stated in terms of ESS, but I can imagine that in terms of revenue, and they will state as well, they give us information about the backlog, which will be relevant as well. But currently, I have really the tendency to give it revenue a negative red rating. Yeah, that is what I think is not that unrealistic. To backload 23 in terms of revenue and postpone deal closure and wait. Yeah, okay, that is nothing new. That is what they mentioned as well, that the backlog is stable. But honestly, guys, they mentioned at the last first half 2024 earnings webcast sheet, they mentioned they will keep us updated about the backlog. Yeah, and now they're stating just it's fully supported by the backlog. I'm not sure if we see more information about this, and I don't want to be too quick, but this is for me a no-go. As I mentioned, I want to achieve higher trust into Alfen's management, and again, I'm willing to do it as an investor, but please give me the chance. And when they, in first half of last business year, they're stating a backlog of, it was 88.3 million, and now they stating it's supported by the backlog. For me, that's a negative development, not an improvement in these terms. However, let's go on. Alfen expects revenue in ESS in 24 to decline approximately 20% in line with our updated outlook. Okay, that at least nothing new negative. Alfen observes the rate of battery price decline has stabilized, but deal cycles, okay, that's good as well, honestly, which means that competition is not getting more heavier, at least from my perspective, but deal cycles continue to take longer as our customers de-risk the project execution phase. Okay, Alfen wants to have substantial backlog coverage of its. Alfen wants to have substantial backlog coverage of its 2025 revenue guidance at the start of the year. Yeah, what means this? I don't know. Honestly, I have no clue what wants to have. once. Really, I have no clue. Okay, and they're not stating anything in terms. Okay, let's check this on. Okay. I was too quick, guys, and I'm very happy about this because they keep on backing their backlog. So what they already have under agreement, under contract, in terms of ESS solutions. And I can tell you, I mean, 72 was, you can see it, Q2 status. And at the last earnings call, they mentioned right now, at the moment of the call, it was 88.3. So now it's 84. It's a decline, which is not positive, even though it looks it's getting up. It went down in the past weeks. Yeah. And the 1 month compared to 1 month ago, roughly, let's say it like this. Market dynamics leading to temporary oversupply in 2024. Price decline of batteries. Yeah. I mean, the prices get lower for customers, for the end consumers or the investors, but as well, at least the costs as well for the producers like Alfen. And yeah, okay. Okay. At least they they provide us some information, but all of this is not that much fun. You can see it here. I prepared a separate table in terms of the backlog, and it was 88.3. Now it's 84. And you can see before it was in terms of the full year coverage of, you can see it, 130 million was expected, and is still expected, as they mentioned. Before it was covered last quarter, it was covered by 56%. The backlog is covering it, and 64% it's now covering. Yeah, but again, in the past weeks, it actually declined from 88.3 million, what they have stated in their documentation. One more time, Alfen wants to have substantial backlog coverage of its 2025 revenue. So I can imagine that they go again in 2025 for roughly 130 million. ESS, or even a little bit higher, I can imagine. And yeah, maybe they want to go for a backlog coverage of something like 80% when you talk about sustainable. But maybe this is already sustainable for them. However, something what is not as well that compelling for me, or let's push it in a neutral, because it's hard for me to rate this honestly. It's not the right color code. That's this. But however, revenue, I mean, they told already the outlook, they will go for the lower range, so I can't state it neutral even. I need to rate it overall negative, and that is what I'm doing right now. Yeah. So very unfortunate start into the game, but the profit side, at least on the first glance, looked a little bit more appealing. So let's go back and let's see if there are more news. I mean, we already had this fixation of the financial support. And the margins already looked good as well, even if there was a one-time event involved. Let's see, revenues of, okay. Nothing new. Gross margins, added it already, or let me check it. Yep, we added it. But they're not showing gross margins anymore in detail, right? What is going on, man? I don't like it all, but let's see. That's really no fun. I mean, 2 days ago, Himson Hurst, it was a true pleasure to back the earnings results. I mean, that's part as well of the game, and it makes it interesting. And I don't, if I could step back in time, I would not invest in Alfen, obviously. 60% minus, and who knows what will be the outcome of this call, of this earnings. And let's wait for the tomorrow morning call. But if I could travel back in time, I would not invest, because, I mean, now for me, there's still some chances for this comeback. this turnaround story, and turnaround stories are always difficult to achieve, actually, successful ones. Always sound easier than it is in reality. But let's see. Driven by temperate growth in EV chargers and energy storage markets. Yeah, okay. I mean, you need to know that they stated in the past and positive cash flow. Wow. At least something. But in terms of gross margin, I want to point out something. You can see it here, that here we need to focus this. These are the targets, the what they set by themselves, at least the mid in the ranges they stated in the past. Yeah, so EV chargers 40%, substations 33%, and 23% ESS. And I mean that the margin is now improved compared to last year is because ESS is not selling that well anymore. Substations better, and EV chargers as well recovering a bit compared to the past business year. And that results in higher overall cross margin, also group-wide cross margin results. But again, what I don't like at all, yeah, and you can see it here, I mean, they provided us cross margins for the individual product types in the first half of this business year, and now they don't do it. Why? I really don't understand it. Really, I'm getting almost a little bit pissed, yeah. But why was it the case that in 2023 and before they didn't focus the gross margins in detail of the product types? Then they started to do it in the first half of this business year, and now they stopped doing it. What is this? You don't achieve any trust from my perspective, at least at investors from my side. Yes, I'm not the most experienced one. I'm not an accountant professional and can read balance sheets like other Mickey Mouse booklets or whatsoever. So yeah, I have my deficits and my limitations, but there are others out there like acting like me as well, and they as well getting confused and they're getting unsecured, and the conviction getting lower and lower basically, and the uncertainties and the doubts raises because of this behavior. Yeah. So when you're not providing detailed cross margins, then don't do it. And yeah, just don't do it. I mean, yeah, simple as that. And yeah, maybe there are more details in a half-year report than in a quarter report, but still, I don't like this at all. So we don't have any numbers here. We still rate the cross margins positive because yes, they increased, they are more positive than expected. Yeah, they are above the target, higher than Q2. But again, no details. I don't like this. I don't like this at all. I especially added this table for covering it from now on, and now it's just one number and not four numbers which get provided. We can't see what is going on in terms of the profitability of this single product types. Don't like this. Yeah. Okay. But let's go on. Sorry, guys. Yeah, but at least positive cash flow. Okay, and that is, I think, the only really truly positive information and news about of this full deck of slides. Alfen reached an agreement with the bank on a new financing arrangement. Great. Alfen reached an arrangement with the bank of a new financing arrangement, continuing the current facility, revolving credit facility of 100 million euros with some adjustments in the calculation of the covenants. The 2024 one-off items have been excluded from the covenants calculation. For 2025 and onwards, more flexibility and covenant calculation has been included. Okay, I mean, we have no clue about the details, and that's just fair that they're not briefing us about all the details which is going on in the business. But for me, at least, it's a good sign, a positive sign that the financial institute, the bank, I mean, they're checking the numbers. They don't want to lose as well money or something like this. And that this kind of financial agreement was reached. is for me at least a positive sign. And it was a big one because look guys, if I share my stupid and silly assumptions of the stock price roadmap, the first point more essential news I was waiting for was actually this financial agreement, and I expected it came in Q3. Now it come in Q3, but I expected it will already get announced during Q3, not in the report of Q3, so later on, like now, for instance. However, okay, we're talking about a completely mess of price, but I expected, okay, this will increase the price, this news, but I didn't expect this will get announced during an earnings release. And then I expected they will have this guidance and restructuring program, and they did it. They already announced it a few months ago or weeks ago, and of course that lowered as well the price, but I didn't thought it was that negative, honestly, because it's just obviously you need to release staff members. It's obviously that there is some impact, and they need to check if all product types are necessary. And they mentioned, okay, they checked them, they screened them, and they think still they need to keep on producing substations, EV chargers, and energy storage systems. And that's as well can be a positive sign, something like this. However, and now I'm just waiting for more and more reduction of interest rates, basically, which hopefully have the outcome that EV charging sales, let's say EV sales and solar and wind farm developments and projects, establishments getting reactivated, and of course the private sector, the demand in terms of substations and travel stations gets as well reaccelerated. And maybe, yeah, there's still a chance for 2025 guidance correction, but just the current status, it doesn't look that promising and convincing, let's say like this, at least right now, taking a look on it, because there's so many negative news. And I mean, it's not that surprising that that's the case, because again, a turnaround on this scale, even for a mid-sized company, it not happens from one day to another. Even though if investors like me would love to see it, we need to stay patient. And of course, everyone who's involved or who wants to invested or who wants to be invested need to decide by themselves if they have this patience, what is required. However, let's go back and let's take a look at one of the last slides for today. Update on strategy validation and organization right sizing. See October 15 publication. As communicated in October, we are in final stage of our strategy validation and organization resizing efforts. To reduce overall cost, we have taken a diverse set of measures across all parts of the organization: a cost price saving program, a cost saving program, other operating costs, labor costs including okay, we have it here, the release or the reduction of 15% of jobs. It's not taking place right now, so it needs a little bit more time. And of course, there will be some one-off costs as well when you reduce the staff count by 15%. That is what we need to consider as well. And I mean, yeah, okay, that's at least something very good in the end. But still, I mean, when I originally invested, I really thought, okay, demand of EVs, demand of renewable energy projects, and demand of substations and grid updates, electric grid updates will grow. And so Alfen will grow, and it's a growth stock. And now it's more like an investment case for me that it's priced very cheap. Everyone is thinking about or addressing the worst case to this company, and maybe they're surprised. Yeah, that is the case I see as an investment case, which is completely different to the original one, and which is something I think very difficult to. When you check, you should always, I think, as an investor, check your original idea why you invested, and when that is not existing anymore, like it originally existed, it's always, I think, it's a very narrow path you go, which is and a very difficult one, to not treat yourself like a fool, or you tell yourself lies and fairy tales at the end. You know, you need to reflect yourself very strictly and be honest to yourself. And if you change your investment thesis, your original idea, why investment by 180 degree, like I did at Alfen, kind of. So everything's delayed very strongly. Everything I expected second half of 2024, the business come back. That was my original idea, and now it's postponed by, let's say, 1 year more or less. And yeah, they're going for a cost saving program. What they need to do, of course, it's obvious, and I like to see it. But on the other hand, that as well limiting a bit the capabilities they have to be competitive, to roll out, uncover a higher demand if there is a need in the future. Let's see. But they mentioned they are in a good position. Okay. And it's just regular. If business going too well, sometimes, especially as a smaller company, it's just very regular that you are confronted with challenges. The culture changes sometimes. The people are too full. It's working just, the circumstances are too positive. And then when you hit a wall, you are not prepared. And at the same time, when you expand, you hire so many new staff members. You increase your product portfolio, like in terms of substations, like in terms of EV chargers, which took place, and as well, of course, energy storage systems. You create everything up, then you have a new headquarter. You expand in any direction, firing out of all cylinders, and yeah, sometimes this kind of steps needs to take place. But there's always the question if it is successful, if they can make it happen, and how the stock market is reacting to it, if they're appreciating it or not. And so far, I don't see that much reason why they should. But let's see what gets communicated. You can see it here in February when they covered full 2024, and we're talking about Q4 2024 earnings. What I mentioned here, we will provide full details about right sizing 2024 financial one-off impact and renewed medium-term objectives at our. I mean, they had always this mid-term objectives of 1 billion euros revenue and this kind of stuff. I guess they're talking about this in 2027 maximum, actually. Okay, so one-off items will be booked in Q4 2024, so this might be as well not a banger, not a banger earnings quarter. Yeah. Okay, let's see outlook for Q4 and 2025. Full year revenue to reach the low end of its updated outlook. Okay, so we not go anymore for, at least in my mind, for 502.5. We go more for like 485 million euros full year revenue. And now EV is the reason for it. Okay. Imagine all of this looks solid and doesn't change at least. Limited revenue growth, that's as well not something new. While the grid operators continue to grow, the private domain has relatively flat outlook next year. In EV charging and energy storage, Alfen continues to foresee constrained market growth in 2025 and expect limited revenue growth, also partly due to its strategic choice to apply further focus on its market and products within its portfolio. Yeah, okay, you can see as well it's a regional strategical choice. I mean, they expand as well in terms of internationalization, and I like as well that they set here in higher focus. You know, sometimes you have bad distributor agreements in some markets, for instance, or they are just simply not profitable. And when business is going well, yes, you can basically put your feet into water, which is in an area which is not profitable, and you can just do this experiments, let's say like this, research, figuring out, try and error, and lose a little bit money in some markets. But in these situations, of course, I guess, or I assume they step out of some markets and make sure that what they are doing, they're doing it right, basically, and not doing unprofitable business anymore. However, not something that new, but we need to go back to the Excel sheet because we didn't rate till now the profit perspective. And again, I mean, originally the full year guidance was 5%, and based on revenue, it would be 25 million adjusted EBITDA. And now they already covered 82% of this full year target. And yes, they, as they mentioned, they will consider in Q4 this one-off cost, one-time cost, basically an expenditure because of staff reductions and this kind of stuff. But just taking a look right now, I think it was a good one for this quarter. Not sure how will be the impact, if it's enough for the full year, honestly. But it seems they are on track, but not 100% sure about this. However, for me, this both looks at least positive, and the cross margin again looks positive. I really don't like that they don't provide these cross margin numbers, and the information level still looks thin from my perspective. Profit side is, however, a positive one. We need to be fair here with this company, and I need to be strict here as well. But honestly, guys, I will not do an earnings roundup about this. I don't want to go one more time through this pain. And guys, who knows? Maybe I even sell my position. I really need to sleep a night or multiple ones over it. Yeah, but even though if revenue is red and the profit is green, and overall I should give it a neutral rating, because of the adjustment of the full year revenue, which is now not 502 anymore, as you can see here, but 485. That is now the primary target. And yeah, okay, I need to how I calculated it. Adjust it. Maybe I can adjust it now very quickly. Can make it happen. Is it okay? It looks fine for me at least. So now we're talking about not a growth, but definitely a decrease year on year by roughly 4%. And I hope I didn't make any mistake. And yes, now a bit the coverage looks better, for instance. Should look at least better. Yeah, should be fine, I think. Okay, let me see it one more time. Yeah, looks good. Yeah. However, the level of coverage looks now a little bit better, obviously, but it's just because of this adjusted full year revenue guidance, or at least they address it now to the lower end of it. So top line growth will not be that compelling. Bottom line, of course, not as well because of this one-time cost, very likely, but at least this quarter was a quite vital and positive one. However, this overall thing, I need to rate it. I rate it negative. Yeah, I rate it negative. The news overall was not good enough for me. But now together we will check out the. I'm interested in the price. I hope there is a current price available, because obviously in German in the European market the closing bell already ringed, and yeah, they're I'm not sure if I have access to aftermarket price, but I can really imagine it's tanking. But let's see if it's okay. Wait, give me a moment, please. I check out another vendor of stock prices if I can get some aftermarket information. Okay, let's check it out. I really want to figure out if it's tanking or not. Market Watch. Okay, now I'm on Market Watch. I will share the screen as soon as okay guys, I think I'm not capable to see the aftermarket prices. Maybe I can wait. Last chance I have. I'm quickly log into my broker, my own deep portfolio, and checking out if I maybe have some access to this data through them. Okay, let's see what kind of. So aftermarket. Last price was 11.46. Okay, it looks stable from my perspective, if I'm not mistaken. A little bit lower maybe. Okay, however, that is not sufficient at the end that I can give any solid statement to you guys. Sorry for the quick delay or the short delay. But however, guys, that was really a tough one. I'm really curious about figuring out what will be the outcome today on the impact on the price, stock price. Last time I was actually Q2 or the first half of 2024 results. I was a bit surprised because the bar was hanging that low, and it still was very low, the target, and I think the expectation from the full market. Tomorrow morning I will listen to the earnings call, and I will right afterwards make a decision if I stick to this company or not. I mean, every love story has an end sometimes, even though it was so romantic, so fluffy, so positive. And I'm not sure how strong I can stay patient right now. Maybe the market, and even I sleep a night over it, and maybe I do some additional calculation. I read one more time the slide deck, and I think, okay, I mean, they have at least a follow-up financial agreement. That is very solid, that is essential. Maybe this already pushed the market in a positive direction. Who knows, yeah? But really, overall, if I'm not missing too much, and yes, okay, the cross margin was okay for this quarter. Energy storage system price competition seems to not getting more intensive, at least. Yeah, but substation ramp up is going well in terms of the manufacturing capabilities to more than 80 per week right now, with the target of 100. Okay, but there is so much awkward stuff going on in my perspective, and stuff I don't like to see, and still the information, the level of information, at least from my perspective, guys, as well, one more time, disclaimer, that's no financial advice or whatsoever. It's just I sharing here my opinion, and at the end it's entertainment, you know. So guys, enjoy if you are not invested, because it's definitely, I think, better to stay, at least in the past quarters, obviously, to stay outside and uninvested than being invested and live through this experience. And again, one more time, it's part of the business. You know, Himsenhurst performing well, and then Alfen, for instance, not performing that well. It happens, and I'm sure both of the management's doing their best, the management members, and whatever. But at the end, it's my experience, my story as an investor. I need to take care of it, and if I think if I have the feeling I reached a point in time that I can't take it anymore, maybe I need to go out. I mean, there are always multiple investment options out there, alternatives, and yes, if that's the case, then there's no need to stick that loyally to a company where your trust level and the level how you follow it and being convinced of it getting lower and lower, quarter results by quarter results. I want to wait, because all of this is part of the process. I mean, they are not magicians, you know. It takes time. it's obviously, it takes time, and they try to make it happen. And I would love to stay invested at least till mid next year or something like this, and maybe interest rate till this point in time. And look, we can check it out together. That's the interest rate. Actually, the currency exchange rate is 1 euro to 1.07 US dollar. And here's the interest rate, and it's already getting lower and lower. And the projects, the customers, these kind of products they sell, this business is very interest rate and price sensitive at the end. Yeah, we're talking about sometimes very huge budgets in terms of energy storage systems. All of their products actually are not low price products, despite or except the let's say EV chargers for homeowners, but everything else is always related to a certain level of budget, and interest rates have a huge impact on it. And let's see, I mean, maybe mid next year, 2025, we're talking about 2.5 interest rate or something like this, or even 2, something like this, and business is going re-accelerated, But look, on the other hand, economy could do better at the moment, but way worse at the same time. And who knows? Yes, maybe interest rate is lower next year, but maybe we are in another financial crisis right in, and then company like Alfen, I can imagine, is definitely struggling. And really, then it's not just about achieving a new financial agreement, I can imagine, at least. Yeah. So yeah, you see my mind, my brain is working in different directions, and at the end, as I mentioned, I think I need to sleep one night about it or over it, or a few, and let it sink a bit. Yes, but that's actually the case. However, guys, if you appreciate what I did here for you guys, then feel free to give me a like for the stream, and subscribe to the YouTube channel if you didn't made it till today. Yeah, or already did it. Yeah, got my English. And of course, feel free as well to follow me on the other social media channels like X and Instagram. And just a quick glance on the outlook for this earnings season. So next week, Monday, it will be my exotic week. You can see it here. On Monday, we will start by covering Grab. Not sure what will be the time. The daytime will be really an awkward one, because, at least for me, because it's a Southeast Asian, a Singaporean company. But however, then we go on Tuesday, on the 12th of November, with StoneCo, point of sales provider, financial credit, loan provider, and ERP software solution provider out of Brazil. And then we finalize this week with the digital bank out of Brazil or Latin America as well. And then, yeah, we have a break, and beginning of December, we're going on with SentinelOne, cybersecurity vendor out of the US. However, next week, Monday, Tuesday, Wednesday, if I'm not sick or if I'm not running out of time or other resources, it's very likely that I will be live again, and I would highly appreciate that you join. And guys, appreciate that you already watched me through this stream. Hope you enjoyed it. And of course, most important, take care of yourself. Health is more worth than anything at the end. And yes, one more time, disclaimer that in the past minutes, that was not financial advice, consultation, or whatsoever. There was no guarantee for correctness of the provided data. And hope you appreciated everything, and I hope to see you on Monday. Cheers, guys. A sense of capital.